And this is a sector that is actually doing well today in expectation or anticipation that the US and China trade talks that start today and go on till tomorrow as well will yield something on the positive side. So everywhere that you look, whether it's a steel, iron ore or the base metal prices actually are doing quite well. It actually is spilling over to the other commodities as well. So whether it's the gold prices or crude, everything actually trading in the positive. For the base metal prices, it also is about the data deluge that is expected in this week. You have manufacturing numbers coming in from Japan, US and China. There also is a non-farm payroll data in the US this week. So there is a lot of data and lots of events really lined down. And ahead of that, we have seen some buying come back in case of the base metal prices. Peter McGuire, CEO at Exim Group Australia, now joins us with his sense on that space. Peter, hi. Well, yes, it's a data-heavy week. It's eventful, and there's going to be a lot of statements and decisions coming on. How are you positioning the base metal sector ahead of that?
Well, good afternoon or good morning, Manisha. Look, we've seen a nice rally. I would have expected, not surprising, considering that a lot of those markets was terribly oversold over the last few months, and they've had a nice recovery. The likes of nickel, iron ores sat not a bad little run-up over the last matter of months. If you're looking at where it was in February, 75 and now sitting at about $122, $123 for a US tonne. That is a very, very strong move, the best part of about, 45, 50%. So some of those markets have performed extremely well, and I think there's probably a little bit further upside for many of them yet.
Peter, you mentioned nickel, and yes, Shanghai is trading 2.5% higher on nickel even now. Zinc prices have been gaining, especially with the reports on how we are looking at the inventories at multi-year lows and how 70% of warrants or contracts are held on the LME by one large company itself. So besides the macro, metals like nickel and zinc have individual strong fundamentals as well. And as you rightly pointed out, nickel prices have run up by 40% already in this year. From these current levels, are you looking at further gains in these?
Well, I think so. I feel as though that there's more upside for those markets, and over this rest of the calendar year, there's strong buying. And of course, when you take on board some of those considerations, as far as what you mentioned, that one holder with that large warrant position, so that creates again, I think, further upside. It'll be interesting to see how those numbers come out this week from the likes of Japan and US, and we've got naturally probably one of the most major news impacts that could affect markets, which would be a softening from US Fed as far as interest rates. So if we see a 25 or 50 basis point cut, which everyone is saying is going to be pretty much the level, 25 basis points, and you may even see a 50, then I think that's going to actually stimulate even further upside. So it's going to be a fascinating week how it plays out, and I think that could also underpin the price of gold in the short to medium term.
Well, yes. Peter, since you actually follow all of these commodities, and as we've been discussing, there is just so much data and events lined up. So, and there have been various case studies out as well, 25 basis points or a surprise 50 or no rate cut at all. So there are all those case studies really doing rounds on how investors really should be bracing themselves for various asset classes. But going forward within the commodities sector, where do you see a best bet really emerging in the light of what all the markets are readying themselves for?
Well, Manisha, if you're putting your mind back, I was just looking at some numbers. If you look at gold price over the last year, its low was the best part of about 1180 in the middle of August 2018. So that's 50 weeks ago. In that period, it's put on $250 to the upside. Of that, one needs to consider that there are 250 days, business days. It's put on $1 a day in the last 250 days. So that's a pretty good move to the upside, I think, if you're taking on board that large price point. And then I feel as though that there's every chance. Why won't you see a $1,500 or $1,600 handle if they drop that rate, and how aggressive? And we've got to look at the tone. And I think that's got to be the major point of consideration, is the tone coming from Fed Chair Jerome Powell, what actually is said. And that really gives us a better indication as far as what we're considering over the rest of the calendar year. And I still sit here quite, hand on heart saying, why can't you see a $1,550 to $1,600 handle, or if not higher, if Jerome Powell is very aggressive?
Sure.